Hello, welcome to the Wealthy Trades market forecast for April 28th, 2015. Let's get started right away. I actually want to just dive right into the SPY itself, maybe go into some of the um, other ETFs of the indexes. It's been in a kind of a crazy, not kind of, a fairly crazy, if crazy is do nothing type of markets. So I want to kind of go into the charts. Seems like, again, I've been saying this. If you watch some of my old videos, it's a broken record. We've been at this level, at this topping level, for what seems like forever. And it has been a while. In fact, we kind of pierced. It's been a level between about, a low of like 204, 200, but the level's basically been between 200 and about 211. Okay, and essentially we've been in that kind of range since the beginning of November. So we're talking, coming up on, 6, 7 months now in this range. Now, what I think is probably going to happen, if you look at in May last year, from about end of May, June, until probably about, well, even further back. Let me do this quick. Last year we said it was probably around, probably around May or June until we broke out at the end of October. So it was May, June, July, August, September, October, about 6 months, and then we finally broke into highs. And I see a similar pattern. I think I've been saying I think that we are going to break above these highs here, and then put in a nice rally. I think if we can have a couple nice high volume, nice breakout days above 211, then I think we're gonna end up rallying nice. Now, it's this area that we're in has obviously proven to be very, very difficult to break through. Technically speaking, we are in an uptrend, and technically speaking, the patterns look fairly bullish on what I'm seeing. So I think that we will probably see a breakthrough. I think it's probably going to happen. It actually could happen this week with the Fed speaking, and if they start to signal that, hey, listen, we're going to maintain these low interest rates. Just everybody settle down. There's nothing really going to happen. I think if that happens, I think we could see another real big leg higher, probably for the next month and a half, into the next Fed meeting after this one. So we will see. But again, it's been kind of a crazy market. We've been doing a whole lot of pairs trading, and it seems like we've been kind of getting chopped a little bit. All traders really at these. You put in ranges like we've been putting in the SPY, and any active trader has been getting chopped up. It just bottom line, because again, as an active trader, you want movement and you want volatility. Well, we got the volatility index, almost pushing below 13. I mean, it's unbelievably low right now, and the markets are basically doing a whole lot of nothing. So it's very much an environment where you're kind of getting chopped up. Our monthly trades are still looking good. XLV is looking good. Our weekly trades, we are long the XLU. And then the best stock within the XLU is CMS. That one looks good. We also looked at a couple other ones within there, but CMS was the best. But let's look to see what we're going to do for today. We are going to do another pairs trade. Seems like that's all we've been doing. If you've been noticing this percent in trend, we were in a downtrend, and then we were in an uptrend, and then we're down up. But this percent in trend hasn't been above like 60% for about 2-3 weeks. So it's been a while. That tells you that the overall strength of the trend, regardless of whether we're up or down, has not been all that good. So, but let's figure out what we're going to do today. We're going to just dive right in, and we're going to see which opportunities we can find that are the best. So I'm going to move all these in the material sector over into my portfolio here, and let's find the best opportunities. Okay, so first thing we're going to do, levels Levels to win profit, we're going to eliminate anything that doesn't make a level profit on both sides. Okay, so that's my first filtering tool. It always is my first filtering tool. There's other filtering tools that we can use, but those are my favorite. Um, so I'm going to eliminate anything that doesn't make money on both sides. And there's a couple that I'm pretty sure I can eliminate just simply because they don't make a whole lot of money. The next thing I'm going to do is I'm going to look at the spread between the levels on levels. So if we remember what this is, NUE, for example, closed at 48.60. Okay, 48.60 is where it closed. The expected high today, based on historical ranges and volatility, is 49.20. Expected low is 48. It hits the expected high 53.8% of the time, and then the level, so that's the HPP. The levels on levels tells us how often it closes above that level. So when we're moving in an uptrend on a Tuesday, we want this number to be high because that tells us how often something closes above this level. On the counter trend side, we want this number, both of these numbers, the hit rate, how often does it hit this counter trend level, this 48 level. We want that to be low, and then we especially want the levels on levels percentage to be low because that tells us the probability or the historical percentage rate that it ends up closing below this level. So we want a wide spread. Put it another way, we want a wide spread between these two. So we've got almost a 13-14% spread there. Well, I'm going to do a comparison here, and that's wider than NEM. So I'm going to say NUE is better than NEM. Okay. Well, here's one that's even better. This spread here is almost 17% in comparison to 15%. So LYB is better. This spread here, even though this spread is a little misleading now because it's fairly wide. It doesn't hit the downside that often, but here's the thing I do not like in EMN is when it hits the downside. Yes, it's profitable, but it's not that profitable at all. It doesn't hit it all that often. I get that. But if I'm choosing between these two, I'm actually choosing LYB and not NEM. And then we got another one here, which actually is the best one because LYB, it has about a 17%. Well, this one has almost a 20% spread, and it's profitable on both sides. So ATI is going to be our long stock for the day. I'm going to look at ATI on the chart and just see kind of how it's looking here, just to see. It's looking good. It's actually I like this a lot. It looks like okay. This is nice. This is a great bottoming pattern. Nice kind of head and shoulders here, and then pops out of this area. And to be honest, it's sitting at a fairly key level right in here. If you see this kind of consolidation sell-off level, so it's sitting at a fairly, pretty important level. Actually, it's actually pretty vitally important level. But we'll see how it handles that level. LYB looks good. Let me look at some of these other ones. I'm going to bring in a couple of these other ones, just technically speaking. I'm going to bring back some of these. I want to look at the technicals along with the levels to win information. Again, still going to eliminate anything that doesn't make money. So, whoops. Let me bring back ATI again. So, still doing the same technique, but I'm going to tie in the technicals simply because, again, technicals play a key role, especially when we're kind of in a go nowhere, choppy type of market. We want to make sure that we're not going to put anything in our way that would hinder our odds of success, right? And the technicals play a big role. Yes, probability and historicals play a huge role, but the technicals do too. So ATI is the one we were looking at before. I want to look at the technicals of some of these others, right? And I'll bet a lot of the technicals are probably very similar to ATI, but just to see. I just want to see here. This one looks decent here too. It's a similar pattern. It hasn't quite broke out the way that ATI has. Technically, it looks good. I like the fact that on ATI, I like that on the other one, ATI is sitting at that kind of key area. Let's see. Let's look at ATI. Actually, ATI technically looks good too. Let's go through here. Alright, give me a second. I'm going to go back just to make sure I've got all the stocks I need. Okay, so let's go. Alright, all these look decent. Well, okay, so all these look decent. I want to just see this. Yeah, technically that one looks pretty good. Don't mind that one technically. NEM technically looks. Technically, NEM is not the greatest. It's sitting pretty high at this level. It's kind of just filled that gap. It might have a little bit of a sell-off from this past reaction here. So NEM is one I'm going to eliminate. It's not the best levels to win data either, so I'm going to eliminate that one because of the technicals, mainly because of the levels on levels data. This is the one we were looking at here. You know, I am a little concerned with where it's sitting with this big sell-off level there, LYB. So I actually think NUM, this one here, NUE, actually looks better technically, but let me look at EMN quick. So I think I might mix it up today. I think I might actually go with a different pick than just the standard. Yeah, that one's decent. Let's look at ATI. I know I'm jumping around a little bit here, guys, but I promise, and gals, but I promise I will come up with a good. I like that one too. So technically speaking, I think I like NUE. Yeah, technically speaking, I like NUE and ATI the best. And ATI actually has the best stats. I'm gonna go ATI. So ATI is going to be my long position for today. Technically, it looks the best. Now I got to pair that with a short, and the best shorting opportunities in the XLP, so in the consumer staples sector. So let's move that over. While I'm moving this over, I did send out 2 earnings alerts yesterday, and Merck is looking really good right now. And then coming CMI, a little too early to tell, but both of them have a good opportunity to turn into some great trades. Merck looks like it's going to be a great, real nice trade. So you want to make sure you get those earnings alerts. Those are powerful earnings alerts. All right, so I'm gonna look for the best shorting opportunity here. Now again, I'm gonna kind of go into the charts just to see technically which ones look the best. Okay, so we kind of got it paired down to that. I'm gonna eliminate the XLP itself. Okay, CCE. Let's look at that quick on the charts here. Sitting fairly high. Looks like it might, you know, technically it's not great. Let's look at CBP. I want to kind of compare all these, and then we'll kind of pare it down. This one looks, it's a little lower on the scale than I'd like it to be. So I actually think that CCE is better. It has a better. It has. The stats are about the same, but technically I think it's better. Let's look at HRL. HRL on the chart. You know, the only issue with HRL technically on the short side is I don't love where it's sitting. It's sitting kind of right at that shift level. And that's probably a long-term level. It is. So you see it broke out from there. Now it's not going to give that level up like real easy. So CCE looks best to me on that. PEP. Let's see here. PEP sitting fairly low. It's had kind of a sell-off. I mean, it looks decent. PEP looks decent. Let's see. It's got about a 15. You know, I still like CCE better. SJM. Okay, so this one's sitting fairly high. Looks like it's trying to break out, though. I don't love that. Yeah, SJM looks like it's trying to break out. I don't love that at all. Stats are decent, but it's trying to break out. I'm going to eliminate that one. MDLZ. Again, just tying the technicals just because in this market we want to make sure, let's put the odds in our favor as much as we possibly. This one looks pretty good. I like this because we're still in a downtrend. It's kind of trying to move back up into that shift area. What I mean by the shift area is where the bars went from green to purple. It's trying to move back up there, and you know what? It's probably going to struggle. This one looks pretty decent. In fact, technically that one looks good. Let's look at CCE one more time. CCE, kind of the same thing. I don't love, let me see here, high 45.68. Didn't quite, actually, technically this one looks good too. It, bars turn purple. It's kind of trying to test that. I do like that a lot. Technically, we've got about 15, and so, you know what? I'm going to go with CCE on that technically again. So let's look at WBA quick just to see here. And again, I think it's starting to sell off, but it's kind of already had that kind of a decent size sell off. It's sitting near kind of that last shift, that last bullish shift area. So technically, I think CCE is the best. So here's the play: ATI long at the open. Hold all day long, short CCE, combined technicals today with those positions simply because the market's chopping around. So again, long, ATI at the open, short CCE. Feel free, make sure you use the levels to win data because again, if it hits 34.70, it makes money, or even the downside, it makes money. And on CCE, both of these levels are decent levels to trade at. So I know that was a little longer than normal, a little longer explanation. But again, in this market, in this crazy market, that's kind of the trend really is up and down and up and down. We want to go dive a little deeper, use technicals to our advantage, and find the best opportunities we possibly can. All right, guys, email me if you have any questions, info@wealthytrades.com, and make it a great day.